So over the years, since 1992, God, it's hard to believe it's been that long, but we have financed thousands of investors and have financed the renovation of thousands of homes, and we're really proud of that, all over the country. We've loaned all over the country, and from a personal level, it feels pretty good that we were able to help entrepreneurs help themselves, and we're also, at the end of the day, the finished product, and really the ultimate customer for our business and our product is the communities, and we were able to help improve the communities by improving the housing stock.
Right, and that's something I think a lot of people may not be aware of, is that when a lender is helping entrepreneurs and real estate investors rehab properties, it's really having an impact on the neighborhoods and the communities that have been really devastated by a lot of this economic impact of the last few years, or even just years of neglect and that kind of thing. And it just brings these neighborhoods back when you have people that want to rehab the properties and are interested in pursuing their own careers as an entrepreneur, and then B, they're interested in bringing their communities back to life. And I know personally some people who are buying and rehabbing properties are actually rehabbing entire communities because they're doing one house at a time, but it brings the pride of home ownership back, because typically their buyer is a first-time home buyer who's going to live there and preserve or actually revitalize the community. So it's great that you guys have actually helped the communities and actually helped the individual investors. And I'm one of them, because without Brookview's money from the beginning, I wouldn't have been able to buy my first property, let alone 115.
Yeah, I mean, most of the houses that we do end up being houses that are bought by first-time home buyers.
Right.
And they're terrific houses, for starter houses, for people to have a home and feel part of the community.
So not only are you helping individual investors and communities, but individual home buyers who probably couldn't get started if that house wasn't there.
I mean, it's pretty cool. So you have a business that you've created. It's an entrepreneurial company, and you're able to make a little bit of money at it, and you can help other entrepreneurs in the process, and then ultimately homeowners that will buy the houses and the community. So it's you can see why I'm in love with it.
Right. Now, I mean, this all sounds wonderful, but then, of course, what happens? The economy does what it did, in the last few years. And, I mean, how did you guys survive? I mean, the bubble burst, and we had this credit crisis, and I'm sure so many of your lenders, I know so many of your competitors are now out of business. And how did you guys survive when many of the others did not do as well?
Well, I can tell you it was quite a ride. We were crossing the Atlantic, and, we got this little Brookview boat, sailing away here, and actually, in fact, you know that I'm a sailor, but we're sailing across, and some pretty high winds and seas and so forth, and we're watching all these big companies go down, like Bear Stearns and Merrill Lynch and Lehman Brothers and AIG and all this, and we're like, how are we going to be?
Well, I have to tell you, I used to get calls all the time from other rehab lenders asking me if I was interested in pursuing business with them, and it's funny, those calls have evaporated. I don't get those calls anymore. So it's just a prime example of what's happened in the market out there, that I just don't have people pursuing me because there just aren't rehab lenders pursuing that business.
Well, a lot of them were friends of mine, and I can just go down the list, and dozens of companies, and they just were not able to survive the storm. And what's interesting actually about the rehab lending business is it's kind of a leading indicator in a way, or I should say that because of the short-term nature of the loans, that if you have challenges in the portfolio, you're going to know right away. For example, in our 2009 pool and our 2010 pool, not one loan had even $1 principal loss in it. Okay, and so those of us who know banking and lending know that that's pretty darn good, right? And there's reasons for that. But given the short-term nature of the loans, once you make it past a certain point, you're out of the woods, so to speak. In part, that's the nature of the business. And so I'm glad we're able to sail across the ocean. But look, the reality is there's two primary reasons why I think any lender is successful, and certainly that applies to us and what we did at Brookview. And those two reasons, in my opinion, are this. One, first and foremost, is the underwriting. You have to have good underwriting, and I mean that both from the property perspective and the borrower perspective, and I'll get to that. And the second main reason is systems. Systems. That's probably three reasons all at one. And we can talk about some of the things that I think we did in terms of building our systems, but also And Pat, I'm sure you have systems in your business. In fact, I
Hmm.
know, as part of the club, and you're using and have developed to a large extent the model that we have available for folks. And it's so critical to have systems. So let me just talk about the underwriting. On the property side, I can tell you we have never financed a borrower or a property where we thought that it was not a good transaction for them, that we didn't think it was a good deal for them, not just us. And I can't tell you how many times people have come in and they show us the deal and we run the numbers and we do all the analysis and we say, you know what, Brookview is the only party that's going to make any money in this. Do not do the deal. Or go back and renegotiate it. Because at the end of the day, it has to be a win-win transaction. It has to be something that's going to be successful
Hmm. Hmm.
for the borrower as well as the company that's making the loan. And so that's really important. And we have all sorts of detailed analyses and algorithms that we use and models and so forth that are really important that make sure that it's going to be a good deal. Now, beyond the actual property, we have to look at the borrowers. And, in my opinion, the number one reason which caused the credit crisis and the storm and everything that we've all been through, and there's so many reasons in terms of what caused the credit crisis and the storm, but the number one reason really is the fact that the underwriting was faulty. The number one reason is that they pushed the credit standards, that they changed the underwriting standards to a point where people that were not loan ready, and I use that term loan ready, which is something that Brookview internally uses. We created that terminology because not everybody is loan ready. It doesn't mean that you're bad or evil, okay? It just means that you may not be ready to borrow. And that's what we saw out there, is that the standards were getting so relaxed, the underwriting standards were getting so relaxed, that people who were really not what I would call loan ready were actually borrowing. I mean, I'll give you some numbers here that I read. For example, in the year 2000, the average household income, which more or less 40,000, plus or minus, but in the year 2000, that household could borrow about three times, about 120,000, right? So by the year 2005, that same 40,000 could borrow nine times, 360,000. Now, what happened to those people? And they borrowed more than they should have. And who was at fault of that? Maybe a little bit of both. But did the lenders help those people?
No, no, of course not.
Yeah.
Absolutely.
So that's our position as well. I mean, if you loan somebody money when they're not ready to borrow, when they're not what I would call loan ready, you don't do them any favors at all.